Hi, we're trading up, and today's conversation starter is Bitcoin versus XRP. How are they similar and what are the differences? First of all, I'm not a financial advisor and this is not financial advice. I always encourage you to do your own research. I've done a little research and I want to share what I've found with you. Let's take a look at BTC and XRP in light of our financial system since they're both cryptocurrencies. So in light of the changes in our financial system as it transitions to faster payments, real-time settlement, digital currencies, tokenized assets, and blockchain-based rails, we're going to look at some of the similarities first between XRP and BTC. And as we see, both of them, as I mentioned before, are cryptocurrencies. They're digital assets on a distributed ledger. They allow peer-to-peer transfers. No banks are needed. Both trade on major exchanges, so they're widely accessible. They can be held for long-term investment. People buy both of them for potential appreciation. And both BTC and XRP aim to improve the financial system. BTC through decentralization and independence from banks, and XRP through improving bank settlement speed, low cost, and providing on-demand liquidity. Let's take a deeper dive. All right, so let's take a look at some of the major differences between XRP and BTC. Let's look at it from, first of all, the purpose or the use case. Bitcoin was created as a peer-to-peer digital currency and a store of value, oftentimes referred to as digital gold. XRP, on the other hand, is created for fast, low-cost international payments, as well as for creating on-demand liquidity. It's also created to act as a bridge asset between currencies. For example, if you want to transfer the USD to the euro, XRP acts as a translator or a bridge in between those two currencies to make that transfer occur faster and at a lower cost. Also, another difference between the two is that XRP is ISO 2022 aligned. It's structured to move data in a way that aligns with global banking standards. All right. And BTC is not ISO 2022 aligned. Okay. Also, let's take a look at the ability to tokenize assets. The XRP ledger is enterprise ready, meaning that it meets the high standards of large organizations for scalability, security, reliability, compliance, and support, which allows it to handle complex, large-scale business needs, such as tokenizing assets. BTC is not able to do that. All right, so let's take a look at transaction speed. Bitcoin can take from 10 up to 60 minutes for full confirmation of a transaction, whereas XRP, it can take between 3 to 5 seconds to settle a transaction. Therefore, it provides instant settlement. All right, so let's take a look at the transaction cost. Okay, for Bitcoin, fees vary depending on network congestion. It can range anywhere from $1 to more than $20 during high traffic. And for the fees. And for XRP, the average fee is a fraction of a cent, a fraction of a penny. So XRP is much cheaper to move that transfer, or is much cheaper to move money and to make that transfer. All right, so let's take a look at the supply model. Bitcoin has a maximum supply of 21 million BTC, and XRP has a fixed supply of 100 billion XRP. All right. Ripple Labs created it and still holds a large portion of the XRP supply. They release it through a scheduled release of coins. Okay, and who are the target users? For BTC, the target users are primarily retail investors, traders, and long-term holders, and it's used by institutions for hedging. For XRP, the target users are banks, payment companies, remittance services, and it's focused on financial institutions. All right, so BTC is focused more on consumers and investors, and XRP on banks and enterprise users. All right, so I like to remind you to do your own research. This is not financial advice, but I hope that this has opened up a, a door of conversation for us as we look at the differences between BTC and XRP. Oftentimes, BTC is looked at as digital gold, a hedge of an inflation hedge or store of value, and XRP is often viewed as, well, it is a blockchain-based cross-border payment uh, rail, as well as it helps with banking reinfrastructure and financial institution adoption. So, as the financial system transitions to faster payments, real-time settlement, digital currencies, and tokenized assets, where do you find value, or where do you find the greatest potential upside? Those are questions that we all have to ask. But one thing that we want to do is we want to be prepared by doing our own research and not surprised when these changes come. And as these changes are happening right now. So until next time, take care.